Investing is an essential tool to build wealth, and it requires a strategic approach to yield the desired results. Whether you are a seasoned investor or a beginner, understanding how to invest like a pro can help you achieve your financial goals. In this video, we will provide you with tips and strategies that can help you invest like a pro. Introduction. Investing can be intimidating, especially for beginners. With so many options and strategies, it can be challenging to know where to start. However, investing is an essential tool for building wealth, and with the right approach, anyone can become a successful investor. We will cover topics such as setting investment goals, diversifying your portfolio, understanding your risk tolerance, choosing the right investments, and more. By following these tips, you can become a successful investor and achieve your financial goals. Set your investment goals. The first step to investing like a pro is to set clear investment goals. Your investment goals should be specific, measurable, and achievable. For example, you may want to save for retirement, a down payment on a house, or your child's education. Once you have identified your investment goals, you can develop a plan to achieve them. This plan should include a timeline, how much you need to save, and the types of investments that will help you reach your goals. Diversify your portfolio. Diversification is a crucial strategy for successful investing. By investing in a variety of assets, you can reduce the risk of losing money if one investment performs poorly. A diversified portfolio should include a mix of stocks, bonds, and other assets. You can also diversify by investing in different industries, countries, and asset classes. Understand your risk tolerance. Investing always involves some level of risk. However, the amount of risk you are comfortable taking on will depend on your risk tolerance. If you are comfortable taking on more risk, you may want to invest in higher risk, higher reward investments, such as stocks. If you prefer lower risk, you may want to invest in bonds or other fixed income securities. Choose the right investments. Choosing the right investments is crucial to successful investing. Before investing in any asset, you should conduct research to understand the investment's performance, risk, and potential returns. You can invest in individual stocks, bonds, mutual funds, exchange-traded funds, ETFs, and other assets. Each investment type has its advantages and disadvantages, and the right choice will depend on your investment goals and risk tolerance. Keep your emotions in check. Investing can be emotional, especially when the market experiences volatility. However, successful investors know how to keep their emotions in check and make rational decisions based on research and analysis. To keep your emotions in check, you can create an investment plan that includes strategies for dealing with market fluctuations. You can also avoid making impulsive decisions based on fear or greed. Invest for the long term. Successful investing requires a long-term approach. Short-term market fluctuations should not dictate your investment decisions. Instead, you should focus on your investment goals and stick to your investment plan. Investing for the long term can also help you take advantage of compound interest. Stay informed. Staying informed is crucial to successful investing. You should keep up to date with the latest financial news, market trends, and economic indicators that can impact your investments. You can use a variety of sources to stay informed, including financial news websites, newsletters, and social media. You can also seek advice from financial advisors, who can provide you with personalized investment guidance. Have a plan for exiting investments. Knowing when to sell an investment can be as crucial as knowing when to buy it. You should have a plan for exiting investments that are not performing as expected or no longer align with your investment goals. You can use stop-loss orders or other techniques to limit your losses and protect your investment capital. You can also consider rebalancing your portfolio periodically to ensure that your investments remain aligned with your goals. Learn from your mistakes. Investing can be a learning process, and even the most successful investors make mistakes. The key is to learn from your mistakes and use them as a learning opportunity. You can review your investment decisions regularly to understand what worked and what didn't. You can also seek feedback from financial advisors or other investors to identify areas where you can improve. Seek professional help. Investing can be complex, and it's not always easy to know where to start. If you're struggling to develop an investment plan or need personalized investment guidance, you may want to seek professional help. Financial advisors can provide you with personalized investment advice based on your goals, risk tolerance, and other factors. They can also help you develop an investment plan that aligns with your goals and provides a clear roadmap for achieving them. Conclusion. Investing can be intimidating, but with the right approach, anyone can become a successful investor. By setting clear investment goals, diversifying your portfolio, Understanding your risk tolerance, choosing the right investments, and staying informed, you can achieve your financial goals and build long-term wealth. Remember to keep your emotions in check, invest for the long term, have a plan for exiting investments, and learn from your mistakes. And if you need help, don't hesitate to seek advice from financial advisors or other investment professionals.